So here you have the Wheels Up website, and this is no ordinary flying company. This is flying personalized. Now you might be wondering, how does this differ from, aviation companies that are like Delta, United, et cetera, et cetera? Well, here is how it's different. You're going to see pricing here. This is one-time initiation fee and then annual dues starting year 2. This is what is owed to be part of their club, essentially. This is kind of an exclusive thing where if you fly a lot and if you want to have, personal jets flying you around, but not at the cost of normal, of owning a jet, this is the service for you. And this is what they're trying to advertise. And I'm going to just scroll down here. You can see as available: light jet, mid-size jet, super mid-size jet, large cabin jet. And on the right-hand side is the core membership. This is pretty much the premier membership that costs a lot more. There's an annual due that's a lot more. Authorized lead passengers, there's 4 versus the 2 on the left here. And you are pretty much guaranteed whatever jet that you might want. In addition, you get a 24/7 member services team and a dedicated account manager, and some of the other perks that are with the Connect membership. So regardless, this is their product. This is something that you should be familiar with. So now you kind of know what they do and exactly how much it costs to be a part of this club. So for someone that flies a lot and wants that private jet experience, but maybe doesn't mind sharing to fly private without spending exuberant amounts of money and still getting to fly private, maybe sometimes it's shared, but still, regardless, it's a much more exclusive experience, and it makes you feel like you're a part of the jet club without spending jet money. So let's talk about Wheels Up, the company. So they just actually went through a SPAC, and this is their stock price if you want to go check them out. For the ticker symbol, it's just UP, so pretty easy to remember. And as you can see here, they came onto the market November 13th, 2020. This was at $9, and then they climbed up as high as 11, and then since then they kind of stagnated, and then they had a really big drop since. A total drop from $10.25 to just a few weeks later, 25, almost 26% down. And that's a pretty big deal when we're talking about a company that's never seen these levels before. But it is a new company, so a lot of things could have happened. It could have gone up 100%, it could have gone down 50%, it could have gone up 25%, it could have gone down like it did 25%. So it's very unknown when something like this happens, especially SPACs right now that have seen, as soon as they come onto the market, a huge drop in price. And you might be thinking, well, I've never heard of this company. What are the revenues like? Let's look at that next. So their 2018 revenue was around $300 million. 2019, $380 million. Then 2020 rolls around, $690 million. Now, we don't have figures for 2021, but we will have those numbers soon, and it would be very, very interesting to see how much better they do, especially because that net income needs to come up closer to the positive. Now, from 2019 to now, it's already gained 20 million, but I don't think that they're going to be net positive for a few years. So if you're planning to invest in this company, just be very, very aware that this is a long-term play, but can be very, very profitable in the next few years. So this company's market cap is sitting at 1.86 billion. And when you compare that to a company like Delta, that is sitting at 25 billion, which is also kind of built up a cult following of people that love to travel Delta. They feel like it's this luxurious company to fly with. That's what Wheels Up is going for. So it'll be really interesting to see how close they can get to Delta's revenue numbers in the next 5, 10, 15 years. I mean, they already have the potential to break $1 billion, which is 1/7 of Delta's size, at the same time as being only 1/25 of Delta's market cap. So again, we'll have to see what that looks like, but profitability will be important. Now let's look at the very, very important data that we need to know about Wheels Up in order to kind of form an opinion about the stock long term. The first thing we're going to look at is their future growth. Analysts expect their future growth to be about 47% per year. This is their earnings growth. This is pretty good to see in a company that is just getting, well, their wheels up. So next we have the balance sheet. Their balance sheet is very, very clean. I've seen companies, tech giants, that don't have a lot of overhead or shouldn't have a lot of overhead, but have way bigger debts than them. That doesn't mean that their debt isn't completely gone, eradicated, and it makes sense. I mean, they are spending a lot of money and resources in order to get, 1, their clientele, 2, awareness, 3, they have to have a staff and availability of jets for people to actually use. So this all takes a lot of capital, and I know for a fact This is a company that doesn't want to use their own money in order to grow because they want to scale quickly. And the only way to scale very, very quickly is to use other people's money, scale, and then pay it back. So their debt isn't going to go away. If anything, it might increase. So do not be alarmed. But as long as it stays relatively small compared to their assets, physical assets, cash, etc., they should be okay. Now, the cool thing is this is a first in the market. This article notes that Wheels Up jumps in debut as first aviation stock of its kind. This is something that we've never seen before and could be like picking up Delta, or maybe like a luxurious Uber of the sky as soon as it came onto the market. And for a lot of companies that are in transportation, they've done really well over the long term. Short term, they can be very, very volatile. And that's what we've seen with Uber, Lyft, and even other more aviation-like companies when they first started. Now they're less volatile unless something drastic happens that hurts the entire transportation market. But guess what? This company undercuts all that because people still need to fly, but the safest way to fly is to fly private because you're not bundled up with a bunch of people, and that way you don't even have to worry about any kind of diseases, wearing masks, etc. So this company has IPO'd at a very interesting time. Next, I wanted to show you guys the ownership breakdown. This is showing exactly who owns the stock. So 57% goes to the general public, about 21% is public companies, 12% institutions, 8.3% individual insiders, and then a tiny 0.01% is private companies. So this tells me that this is very well diversified between different groups. So that makes the stock not an easily manipulated type of company. So if public companies decided to sell out a little bit, that doesn't mean institutions or the general public will sell out. And that makes me feel a little bit more confident in the price of the stock becoming a little bit more stable as time goes on. And like I mentioned before, private jet travel became more popular during the pandemic as luxury travelers sought to fly with the health risk of being around large crowds and the hassle of boarding limited commercial flights. Wheels Up even made a statement saying that in their first quarter of 2021, it had a record year-over-year revenue growth of 68% and a 56% increase in active members. The company had 10,995 active users in 2020. That figure is expected to rise to 12,853 this year, and I think it might be even more. But as you guys know that frequent the channel, I like to look at the downsides of the stock as well. And one of the things is that the shares are highly illiquid. So if you were looking to buy or sell shares, it's kind of difficult to do. Now, the other risk is that they are currently unprofitable and not forecast to become profitable over the next 3 years. As I mentioned before, it could take them 2, 3, even up to 5 years to fully become profitable. And a lot of analysts, even just the general public, will dog on companies that are not profitable, especially when it comes to big innovative plays like this. I mean, Tesla got flack for years and years and years, even though they were growing so exponentially as a company, but people did not care about that. And big hedge fund managers and big time investors didn't even care to talk about the company in a positive light until it became profitable for multiple quarters. So that's just something to pay attention to and be wary of if you're thinking about putting some money in this stock. Now, of course, this leads me into, would I buy this stock? And the answer to that question is absolutely. I've actually started to buy shares down here once it started to crash. I saw this big dip and I said, hey, this stock is growing pretty quickly. I mean, again, year over year revenue has grown 67%. Operating income has gone up 32%. This stock is growing on the back end, but the shares aren't actually growing on the front end. And that is something that is going to happen with stocks like this. So where do I feel comfortable buying this stock? Anywhere under $10 is a great price for me. Honestly, if I see the stock touch $5, $4, $3, I would be happy to double, triple, and quadruple my position size as of right now. Unless for some reason they just have a lot of insider selling or the CEO up and quits or something drastic happens, I don't see this company's growth slowing down in the next few years. And I think that this will be a good investment for those who want to be in it for the long term. And considering even in the short term from these levels, it's a double up to $15 where it's been at for one day before. And if I could see a $5 Wheels Up stock, then I would love to buy up at least double of what I hold today. So as you guys know, as a long-term investor, I'll be dollar cost averaging in. And on the big dips, I'll be buying a little bit more than my normal daily purchases.